Recently, the price of Tesla stock has skyrocketed, and it appears that huge things are ahead. The corporation is reportedly aiming to reach $400 per share this year, but are they accurate? In this video, we'll go through a few potential reasons why Tesla may miss its target this year, and why the stock may not rise as much as many anticipate. Welcome back to Everything, Everyone, and hello. Famous for its electric vehicles is Tesla. Major challenges are being faced by Tesla this year. Their stock value is steadily declining due to inflation, and it doesn't appear that they will ever be able to attain their target of $400. The recurrent Shanghai shutdowns and difficulties following the 4th of July holiday are only one of several factors that could prevent Tesla from achieving its objective. After a poor quarter of deliveries, extraordinary levels of production, and 3 weeks of factory downtime in March, Tesla investors had a lot to consider. Shanghai's municipal officials imposed strict lockdowns on the populace in an effort to contain the epidemic after cases spiked over the previous quarter, similar to many other businesses. After 22 days of production pausing, Tesla was compelled to halt operations at its Shanghai facility. On April 19, the manufacturer was finally able to go back to business and lessen the number of worker movements in the area. Tesla brought back 8,000 workers for a closed-loop shift in which workers remained at the facility and slept there. Due to the 22 days of production that were lost before we continued, Tesla warned that it will take some time for the firm to ramp up production back to pre-lockdown levels. Guys, if you enjoy this kind of stuff, don't forget to hit the bell notification button, subscribe, and like button to keep up with Tesla news. Tesla announced in April that it was making great progress and contributed to the May 16th restart of daily production of 2,600 vehicles. At the time, we did note that it appeared to be a demanding request that would be challenging to uphold. The Shanghai-based Model Y assembly line was mostly shut down by the electric vehicle manufacturer during the first 2 weeks of July. It then paused a Model 3 line for a 20-day period commencing on July 18th, according to people with knowledge of the matter. According to Philippe Houchois' study with a buy rating on Tesla shares, the relative weakness of the quarter was anticipated. Factory upgrades to increase both cars' output were projected to be finished by the start of August. The pandemic-related shutdown of Shanghai, which lasted for weeks, caused the most harm to Tesla's performance in the preceding quarter, although Tesla's facilities in Austin, Texas, and the area around Berlin are just getting started, and its Shanghai factory is the company's most productive plant. The company went to great lengths to restart its factory there and keep it operating, with thousands of workers sleeping on the premises to maintain partial production. Elon Musk continues to allude to Tesla's new plants in his statements as muddy furnaces, which the author took to mean that significant disruptions in working capital may have had an effect on Tesla's free cash flow. According to him, Berlin and Austin are currently losing billions of dollars as a result of high costs and low output. The primary concern of Tesla is what this means for electric vehicle manufacturers like Tesla and its investors. On May 31, Musk informed the Silicon Valley-based Tesla owners that they have restored full operations in Shanghai and are working to make Berlin and Austin operational. Watch to find out more. Due to the Shanghai shutdown and challenges starting up other factories starting in the first quarter of 2020, Tesla shares dropped by a record-breaking 38% in the most recent quarter that concluded in June, setting a new quarterly low. If there isn't a closure at its Shanghai factory, the S&P 500 has fallen by 16 points, setting a new low for the major U.S. stock market. This year, Tesla's stock performance might deteriorate considerably more, which might keep it from achieving its $400 price target as well. In June, Tesla's stock decreased by about 9% as a result of inflationary worries. The entire auto industry is affected, so it's not just a concern for Tesla. Since the beginning of last year, the automaker has raised its prices, and the majority of its automobile models and trim levels have seen price increases ranging from $2,000 to $6,000. Elon Musk said in July that Tesla is delaying cutting the cost of its TVs, which have increased by 20 to 30% over the past few years, until inflation has subsided. Early on, the cost of electric vehicles was one of the most often voiced complaints. Up until 2020, when the pandemic struck and unchecked inflation destroyed the world economy, EV supporters were right when they claimed that costs will decrease with more volume, and as battery costs decreased with new technologies. The reason Tesla stands out as the best example of this is due to its direct consumer approach, which does not rely on car dealerships reaching a final agreement on pricing with customers. Instead, the prices shown on Tesla's website are the actual prices, and they have been steadily rising. Musk stated that while Tesla wants to keep EVs as low as possible, doing so has proven to be extremely challenging given that inflation is at a 40 or 50-year high. He may believe that the official figures significantly underestimate the true scope of inflation. It should be added that there is still significant cost pressure in some areas, with suppliers requesting pricing hikes of 20 to 30% for items from the beginning of this year to the end of this year. For instance, the price of the Model I has increased by 25% in less than 2 years from its initial price of $53,000 in early 2020 to its current starting price of $66,000. Trend. It's important to note that Tesla's prices have increased greatly over the past 2 years, and that the company's gross margin has also increased significantly. This suggests that Tesla's pricing increases have exceeded price increases brought on by supply chain issues and inflation. Tesla has provided an explanation for this, claiming that it was obliged to increase pricing as a result of having an order backlog that would require 6 to 10 months to complete. The carmaker has not been able to precisely predict those prices while producing the vehicles required today. During the conference call to discuss the Q2 2022 results, Musk again attributes the price increases to problems with the supply chain and inflation. He claimed we had several price increases, some of which were pretty embarrassing, as well as numerous supply chain and production shocks and exorbitant inflation. Additionally, the CEO mentioned that it seems like inflation may be slowing down. In such case, Tesla will be able to quit manipulating prices and resume steadily lowering them. I'll also add that his assertion needs to be taken with a grain of salt. Inflation, in my opinion, will start to drop around the end of the year. According to Musk, I'm hopeful, and this is not a promise, that at some time we can lower prices a little bit. Price growth over the long term seems unlikely. You did hope that Tesla would not need to raise its prices any further, and he added that the current pricing is based on his estimation of the likely additional costs and whether or not they will actually occur. Tesla may have somewhat lowered its prices, but in reaction to rising inflation, international banks also adopted a tightened monetary policy, which undoubtedly had an impact on risky assets. This year, the cost of these assets has decreased dramatically. Since it will take time for inflation to return to sustainable levels, this situation is unlikely to change very soon. As a result, Tesla may not be able to attain its $400 goal price. The exciting part is now. The highly anticipated Artificial Intelligence Day may not be enough to break the stock out of its current trading range, which is another reason why Tesla may not reach its target. After CEO Elon Musk claimed that the business may already have a working version of Optimus, the robot unveiled in August of last year during Aid, Tesla postponed its second AI Day till September 30. Tesla won't be able to recruit more investors and reach that price because most people are uninformed of the complexity of the project and may believe the AI date to be a scam. Target, though on the earnings call for Tesla's first quarter in April, Musk did comment that it was surprising that not many people were aware of the scope of the Optimus robot program. He asserts that people with understanding or attentive ears will recognize that it will ultimately be worse than the auto industry and more valuable than SSD. Nonetheless, it is certain that not everyone will agree with him. Another element that might have prevented Hazel's stock from reaching its valuation is Elon's acquisition of Twitter. The Wall Street Journal reported that Musk is no longer planning to use Tesla shares to finance his $44 billion acquisition of Twitter as a result of Tesla's market loss of roughly a third this year. However, as there are still many possibilities in the agreement, investors would wish to consider the stock performance before making a purchase. What do you think about the price of Tesla shares exceeding $400? Will the closure of the Shanghai facility have an impact on stock prices? Would you like to know what Tesla has been doing recently? Let us know in the comments section. Click on the video that appears on your screen. Hello there.